we were able to pull out it was about $25,000 after the flip project.
Okay.
And then continue on with a rent to own. And over 3 years, we're projected to make an additional $30,000.
Dave Shimko. So he's a student as well as a friend. And Dave's doing some great things with his partner and talk about some of his experiences with doing flips and turning them into rent on. So Dave, welcome. Welcome here.
Hey, Cam. Hey, everybody else.
Great to have you on again.
Yeah, it's awesome.
So you've done a bunch of flips. Tell me about them.
Yeah, we have done a bunch of flips. We're getting better and better at them. Some have been pretty good, just like you read up in your real estate investing book, and others have been not so good. So the big thing for us is, knowing your market, knowing what a house is going to sell for,
Yeah.
and then being able to get an accurate construction cost nailed down when you buy or before you buy the house, right?
Right.
And the construction cost is probably the wild card because finding a good contractor is difficult. And then even if you have a good contractor who will stick to their price, you start opening up stuff inside the house and you find a lot of out of scope items. So we've had a range of successes with our flips.
That's good. That's what often, you hear from people as a range. And I think another point you didn't mention, well, you alluded to it, but is really managing the contractors, right? You said, will they stick to their price? Well, yeah, that's one. The struggle I've seen with myself and lots of other people is, will they show up to the job?
Yes, timelines and schedule for sure.
But the more flips you do, the more you get on top of that stuff and you put systems in play. And lots of people who are watching this have got flipping experience and know a lot about flipping but this whole idea of making it more profitable, I mean, that's one of the reasons why I asked you to come on to this, is because you've had some fantastic success with this. So I know you've got a couple of different examples. Which one do you want to dive into?
I think the one I like to dive into is one we completed it last year and turned it into a rent to own. And that was kind of our plan right from the hop. Before we get into that, I guess now what we do when we evaluate a property, a flip into a rent to own is always one of the strategies we look at.
Okay.
So does this make sense to do a flip into a rent to own to essentially extend the project and keep it generating profit for us?
Mm-hmm.
Yeah. So one project I can talk about here, it was in Regina here, 850 square foot bungalow. We actually bought it off another investor in town. They wholesaled it to us. So
Okay.
it's pretty interesting. We have wholesaled a few properties, but we've also bought a few from wholesale. So separate note, it's kind of cool. You never know where a deal is going to come from or your relationship can work with someone.
Totally.
So we bought the house and it's pretty standard, basically full gut for a flip. And this one we thought, based on the location, based on the fact to be a 4-bed, 2-bath, we thought it'd be a very good rent to own. Like when it was going to be done, if you look at the house, you're like, yeah, that's a great rent to own. That's a house that families want to buy.
Right.
So for this particular one, our exit strategy number one, as it's always good to have multiple exit strategies on the property.
Yes.
Exit strategy number one is to flip it and then turn it into a rent to own. Exit strategy number two would have actually been just to flip it and sell it. If we had wanted some cash or were in a cash crunch at that particular moment, we could have also pulled the pin. But it worked out for us that we were able to flip it. We actually did pretty good with our numbers. Our numbers were great on the renovation side. The schedule was pushed back by about 4 months. So that cost us about an extra, that one was about $2,000 a month to carry during the rental. So when it was done, we actually started bringing advertising for our rent to own clients, but it was done.
Nice.
And it's quite interesting. We tried to bring them in quite early in the process, but when the houses still had quite a bit of construction to go, I don't think people could envision what it was going to look like. Mm-hmm. And we got everybody basically just said, no, I'm not interested type of thing. We basically kept kind of doing that. And then basically kind of right when the house was finished, like boom, that week we had someone sign up. So would they have liked it anyways? Was it because the house was finished? I don't know, but the better the house shows, I think the better chance you have is of success at that one. Yeah, so we were able to generate some flip profits, if you will, and pull some cash out of the deal at the end of the renovation. And then we turn it into a rent to own. And that one in particular, in general terms for the numbers, our projections were to make about $25,000 on the flip portion. Had we kind of sold through a realtor and everything like that, which is pretty good. That's kind of our particular ballpark for when we do flips. But we were able to pull out about, I forget the exact number. It was about $25,000 after the flip project.
Okay.
And then continue on with a rent to own. And over 3 years, we're projected to make an additional $30,000.
Wow.
So,
Okay.
so yeah, we essentially, by leaving our money in there, we have a great asset that we're in control of, and we doubled our money or a little bit more.
Okay. So are you saying that you did the renos and then you refinanced with the bank?
This particular one, we actually got an investor on board and sold it to them.
Okay.
But it's essentially the same strategy, right? We shifted from our private investor who funded the flip essentially to another investor. So at that point, we had the option to refinance with the bank ourselves and keep it going that way. Or by bringing in an investor, we were able to pull some of that cash from the future to the present and then split the rent to own profit with them over the next 3 years.
Okay. So basically what I hear you saying is that you did a flip and you figured out your numbers and you were pretty good within your numbers. But you didn't sell it on MLS, but you sold it privately, I'm assuming.
Yes, that's correct.
To a new investor.
Yes.
Now, didn't this investor just want to run their own thing in it, or like?
Nope, they wanted to invest in real estate but not do any work.
Okay.
So yeah, they wanted to be completely passive, but they still like the real estate in general and the returns you're offering them.
Okay. So basically, you with one product created multiple sources of income, right? So not just the flip, but you did the flip and then you packaged it, you put a bow on it and presented it to a new investor, say, hey, if you buy it at this price, here's what you'll get in return. And you kept the house in your program as a rent to own.
That's right.
Okay.
So basically with one house, we were able to do the flip, get a lump sum profit at the start or after a couple months.
Yeah.
Then we were able to get cash flow. We were cash flowing on that one about $330 a month cash flow.
Okay.
3 years. And then there'll be another lump sum at the end when the tenant buyer purchases it.
And how your investor feel about this whole plan that you put before them, this cockamamie idea that you presented to them? How do they feel about this?
Right. Well, there's lots of moving parts for us. It's a lot more simple to the investor.
Mm-hmm.
They're buying a newly renovated house, in this case, top to bottom. Nothing's going to come up. It's like new furnace, new shingles, new windows, new everything, new electrical panel, all that kind of stuff. So they're getting a great asset that secures their investment, right? Go buy in the stock market, your stocks go poof, get devalued. What do you have for it?
Mm-hmm.
Nothing.
Nothing.
So they're happy to have the physical asset that's in great shape, and they get a monthly rent payment from us every month that provides them with cash flow as well.
So if I'm a flipper listening to you, what are the benefits of this for me? Like I could have just got out and made my 25K.
Yeah, I mean the reason we look at this all the time is, okay, so you're doing a real estate investor and you want to keep churning that money, keep making that money, right? So you can buy a house, flip it, $25,000 to get out. Then you have all the legwork, all the renos, everything like that to find your next one for $25,000. Or you have this house that you know inside and out, you can just use that to create your next project and get another $25,000, $30,000, $35,000. Like you already have that house, which is a large part of a successful investment.
Yeah, because oftentimes what you're saying is that sometimes it's hard just finding the right house that
Mhm.
cash flows.
Yeah, exactly.
And now this is a property that you've been inside and out from front to back. And so you know the property well, and you're working with a new investor to essentially refinance the deal, but so you can pull all your capital out,
Hmm.
but now you're still involved with it because you're looking after the house on behalf of the owner, and they're getting, I'm assuming, double digit returns.
Yep,
But then you're also receiving cash flow because you're putting a tenant buyer client in there who will eventually qualify to purchase the house.
that's right.
So a couple major savings that I see there are when you sell to the investor, you don't have realtor fees, which is significant. And then
Hmm.
again, when the tenant buyer qualifies and buys it, it's also a private sale. So you don't need a realtor at that point either. It's another savings at that point.
Definitely. And that's the reason we were able to we actually sold the house to the investor below market value. But since there's no realtor fees, we still made our projected profit.
Mhm.
So that's another protection or the investors protected in that manner,
Right.
right? All our investors, I consider their money more valuable than mine, right? Like
Mhm.
I'm going to do what needs to be done to make sure it's a success for them. So by them buying it under market initially, even if something happens to the rent owned clients down the road, we could just throw this on the MLS at a later date, but we have that bit of equity already built in that would essentially cover our sale costs.
And have you done more than one of these?
We've done one where we continued to hold ownership and just did a refinance.
Okay.
And we've done one full flip to rent to own. We just got another property under contract last week. We might flip that into a rent to own as well. We're going to kind of do the renovations and see where things sit.
Hmm.
So the great part about this is depending on your current cash requirements, if you need to pull the trigger and sell, sure. But if you're in a position where, this is a little bit extra cash and you can extend that out, then you can make a lot of profit. Because if you do a flip and sell right now for $25,000, or in 3 years, you get a total of $50,000 from the whole deal, right? Where else can you put $25,000 to double it in 3 years?
Yeah.
If you know, send me a message. Right. So that's essentially what we're doing is for us and our like internal numbers, that's whatever 30, 33% rate of return. Like
Mhm.
you know,
Yeah.
that's a pretty darn good rate of return.
It's awesome. And you start doing multiple of them, then it's just a matter of, you got the systems in play and you got to feed the properties in, you got to find the great tenant buyers and finding investors too, right?
And it's
So,
kind of like filling the pipeline, right? Because if you
yeah.
do one if you did one every 6 months and in 3 years they start to close, then you're starting to realize double all your profits
Hmm.
continuously. So, or more.
Yeah. And I mean, that's if you're doing a flip. I mean, oftentimes some properties you just don't even need to do a flip.
Mm-hmm.
And they're turnkey, whether they're clean and they're pretty or they're clean and they're dated, but move-in ready. I've even done it where it was clean, but it looked dirty and it looked dated and was able to fill it because of the upside for the tenant buyers. Okay, cool. So that last one you did, essentially, not the one that you sold, but the other one essentially was like a burr where you bought
Yep.
it, you repaired it, you rented it, and you refinanced it, and then you pull your cash out. You can repeat it, right? That's a burr, and that's
Exactly.
for long-term holds. You're looking at this more of a not a as long of a long-term hold, but more of what we've discussed as a burrito, right? Where you do a burr, but you turn it into a rent-own. So BRRRTO, BRR rent-own. And that's a great strategy. I'm going to talk about that a little bit more